Well, it's official, everybody. Inflation is over. 0% inflation in the month of July. And I heard it from the commander in chief himself, so I really don't feel like there's anything left to worry about. I mean, he's a good man. People in his administration are good people. I'm sure they wouldn't mislead us about anything in the economy. I'm sure that if we were in a recession, they would tell us. If inflation was going to be an ongoing problem, and in fact, it was going to get much, much, much worse, I'm sure they would let us know. But thankfully, they have got it beat. 0% inflation in the month of July. Thank God for the Federal Reserve and their 2.5% federal funds rate. And thank God for the Inflation Reduction Act. Our brave Congress and president sponsoring this bill. $480 billion, I think that's about what it cost. And that's all it cost to get inflation under control. So we can rest easy. It's kind of weird. I mean, I would have thought that a problem like inflation brought on by profligate government spending and funding that spending with the printing press, I would have thought that another bill funded by the printing press costing almost $500 billion would actually have made inflation worse. But apparently I'm mistaken, because we had 0% inflation in the month of July. And boy, do I have egg on my face. I mean, I feel really silly having had stacked all this gold and silver. This stuff obviously isn't going to come in handy at all now because inflation is under control. I mean, if you got 0% inflation, what do you need gold and silver for, right? So I'll probably go down to the coin shop today, see how many fiat Federal Reserve notes I can get for all this metal because, I just don't think I'm going to need it anymore if inflation is going away forever and it's under control. And of course, I'm being a little tongue-in-cheek here. I hope you can recognize that if you're watching this. I'll probably be inundated with comments about how I'm a shill for the administration or something like that after publishing this video with an intro like that. But yeah, I mean, inflation in July, it wasn't as high as it has been, and inflation doesn't move up in a straight line. Of course, a big contributing factor to the lower CPI print that we got for the month of July was falling energy prices in the form of a lower oil price and lower gasoline prices. And certainly, I mean, it is true, gas is cheaper now than it was earlier this year. If you go to the pump, you will see that. But I don't think the government really can take too much credit for falling energy prices. A lot of that has to do with the fact that the economy is just in shambles and people can't afford as much gas, and so they're not bidding the price up as much, and the demand for energy is declining. Part of it also is the sale of oil from the strategic petroleum reserves. I mentioned that in a video a couple days ago, and I had some people in the comments tell me that the sales from the SPR are not sufficient to affect the price of oil. And, that's not really accurate because they're selling about 1 million barrels a day out of the Strategic Petroleum Reserve, and that represents about 5%, actually just above 5% of total U.S. energy consumption. And so, of course, sales of that magnitude are going to have an effect. The degree to which, I guess, is debatable, but whatever the price of oil would have been absent those sales, it is going to be lower in the presence of those sales. But that's just a temporary measure, and it's not one I agree with, even if I acknowledge that those sales are going to reduce the price of oil temporarily. I think a lot of people don't want to acknowledge that fact because they think that somehow they're implicitly supporting the administration by, recognizing that fact. But, just because it's driving the price of oil down temporarily, it doesn't mean that it's any kind of a long-term fix. In fact, to the extent that it manipulates the price lower and it causes efficiencies that otherwise would end up being built into the system to be delayed, it's not good for the long run. And of course, it's not a sustainable solution because there's only so much oil there. And now, of course, the Strategic Petroleum Reserve, it's at the lowest level that it's been at in decades. So, should we get into a conflict? And of course, what are the chances of that? I mean, as far as I know, there's not really any hotspots around the world right now, right? Yeah, should we get into a conflict with either Russia or Iran or China or possibly all three, we're probably going to want some of that oil. But of course, we won't have as much because it was used to lower the price of oil ahead of midterm elections. And that's the other thing I want to point out here is that if you've been alive on this earth for any amount of time and you've paid attention to the election cycle and to the price of oil, you understand how it works. Before the elections, the price of oil comes down, some pain is alleviated at the pump, and then after the elections are over, they go right back up. So I think that that's what we can expect to happen at the end of this year. And it's not just the fact that the elections are going to be over. There's also the fact that, one, the wanton money creation and profligate spending is continuing, driving up the, real main cause of inflation. Also, the fact that these energy embargoes against Russia are still in the process of kicking in. And in fact, a European ban on Russian coal imports just went into effect. And so that sort of thing is going to continue to put upward pressure on energy prices, leading to higher inflation here in the West. And later this year, the insurance companies in the UK and the EU, they're going to stop insuring Russian oil tanker ships, or at least that's the plan, according to the current embargo and the current set of sanctions. It just hasn't gone into effect yet. So if the effects of that are going to be too detrimental to the global economy, maybe they will change the plan. But if that does happen, we are going to see much higher energy prices. And for all of those reasons, I think it's pretty obvious that the reduction in the rate of inflation that we saw last month is just going to be a temporary thing. And it's completely normal in an economy for inflation, even when it's on the way up, to ebb and flow somewhat. It doesn't move up in a straight line. And I wouldn't take the administration or the Fed's word that this is a sign of any kind of progress in the war on inflation. It's just normal market action. And I think that by the end of the year, we are going to see a much higher CPI print. I mean, it might not be in the next month or two. In fact, there are some reasons why I believe this slight decline in the rate of inflation is going to persist for a few months. But by year end, I think that we are going to all realize what is going on with inflation and with the dollar, and just how ineffective all of these attempts to reduce inflation by legislation or government fiat are going to fail. How they're not going to be effective, because the real problem hasn't been addressed, and it cannot be addressed. That's the thing. They can't get interest rates up high enough. They cannot reduce the indebtedness in the economy. They cannot shrink the money supply. They cannot shrink the Fed's balance sheet without triggering massive economic pain, without triggering a debt crisis, without triggering a recession or depression, the likes of which no one living has ever seen. And that's going to become clear here in the very near future. If you take a look at this chart, this is from the St. Louis Fed. This is a chart of the federal funds rate going back to about 1980. And you can see a very clear trend here, and that is that the rate has been coming down and that it has these kind of peaks and troughs. And you'll notice that each subsequent peak of the federal funds rate is slightly lower than the last. And what this trend represents is, since the 1980s, every time the economy has entered into a recession, the Fed slashes rates to try to stimulate the economy. But each time they do that, they get a little bit less stimulus out of the same amount of money, because there's more indebtedness in the system, there's more leverage, and that means that, each time they go to hike these rates to try to get normalization of the economy and to get inflation under control, they are only able to make slightly less progress. And one thing you'll notice is that we're pretty much at the trend line right now. If you draw a downward sloping trend line from the 1980s, we have pretty much hit that point on the federal funds rate at this point. And so, we've got some people at the Fed, like Neil Kashkari, the president of the Minneapolis Fed. He's saying that the Fed is going to get interest rates up to 3.5% or 4% in 2023. And I don't know, I just don't see it happening. It seems like history tells us that they're going to have to pivot and cut rates before then, or we're just going to experience tremendous economic pain. And I don't think that's going to be very politically palatable. I think there's going to be a lot of pressure on the Fed to pivot and ease policy here in the very near future. And, the price of gold and silver, right now they are low, $20 an ounce for silver. We've seen a little bit of a recovery from that low of about $18, but silver and gold still extremely cheap at these levels. I don't think they reflect the reality of inflation or the reality of what's going on with the U.S. debt market and with interest rates in any way, shape, or form. And I get a lot of people who tell me in the comments, oh, gold and silver, they're going nowhere. And it's a lot of the same people, so it's kind of funny. I mean, I think I have part of my audience that likes gold and silver, and then part that just watches it to troll me, or maybe because they, love to hate this sort of thing. But whatever. I mean, I've been called a silver pumper, a permable. I'm not pumping the price of silver. I don't sell gold and silver. I buy it, I accumulate it myself. I am a stacker. I'm just sharing with you, my convictions in regards to the economy and what I see as eventually being inevitable, and that is a U.S. debt crisis, a U.S. dollar collapse, because the situation that we're in, we've got $30.6 trillion here in the U.S. That's the national debt. We've got $91 trillion total debt here in the U.S. That's including the debt of individuals. And that comes out to about $70,000 in debt per citizen. And you know what the savings in this country is? About $8,500 per family in liquid cash savings. So when you look at those two numbers and you look at the levels of debt that we've accrued, it's pretty obvious that this is a situation that you can't get out of just by paying the debt off. Because if you do that, the only way to do that is to implement massive austerity, cut the military, cut Social Security, cut Medicare, massively increase taxes, and then start whittling away at this debt. But I think we all know that that's not going to happen. I mean, I can't think of a single time in history that that has ever happened with a country that has gotten into the kind of debt that we are currently in. Now, the two options really are to default on the debt, restructure it, pay the debtors off, pennies on the dollar, and maybe the dollar loses its world reserve status at that point because they realize that the US is not really creditworthy. Or the other potential exit strategy from this position of debt is to pay the debt off in devalued currency. And historically, that is generally what countries do when they rack up unpayable levels of debt. They just hyperinflate the currency away, they devalue it, and that's where we are headed. That is my conviction. That's why I'm still stacking gold and silver. I'm not really going to take this down to the pawn shop and sell it just because inflation was quote unquote at 0% in July. And I think we all know that the real inflation numbers are actually higher than the CPI tells us. So maybe the CPI was at 0% for 1 month, but prices are continuing to rise, and the U.S. consumer is going to continue to get squeezed. Unfortunately, we don't have the strong economy that we've been told, and the situation is not looking great. But the good news is that it doesn't seem like investors have really realized the magnitude of the situation that we find ourselves in. The majority of investors out there are still chasing after stocks, paper assets, thinking that currency, like the dollar, is a safe place to store wealth, is a safe place to store value. And I think that pretty obviously, to anybody who's paying attention, anybody who thinks about the situation critically, without the normalcy bias that like, hey, everything's been fine, so it's going to be fine. I think that anybody who's looking at things that way understands that precious metals are the place to be. So let me know what you think in the comments down below. Thank you all very much for watching. Don't forget to like, comment, and subscribe, and I will catch you next time. Smart Silver Stacker, out.